Hey everybody, hope everyone's doing well and had a good day today. This video will be a brief recap of the Emini 5-minute chart for Monday, April 14th, 2025. And just really quickly, I want to go over some of the higher time frame context. We'll look at the Globex chart and then we'll get into the 5-minute. Here's the daily chart. What stands out to me here, we go into the day, here's Friday. By the way, if I refer to the prior trading day as yesterday, so even if it's Monday, if I say yesterday, I'm talking about the last week's Friday. And here's the context going into today. Here's Friday. It's a good-looking buy signal bar, but it's an inside bar, which is a trading range bar, and it's a high one buy signal, but is this the bottom of a trading range or early in a bull spike that's in the beginning of a bull trend? Or are we in a trading range? We just had this bear breakout point up here, vacuum test of that breakout point, found resistance. Looks like we're going up to test it again. I suspect we'll find sellers above yesterday, Friday's high, and higher, even if there are not sellers directly above the bar, which might be the case. It's a decent buy signal bar. Instead of traders taking the sell directly above the bar, they may sell at some distance above the bar. Maybe the big bull trend bars close, maybe the breakout point, somewhere up here. That's my thoughts on the higher time frame. And then for Globex 15-minute chart, just because we had a gap going into the day, fairly big gap, I like to see what happened overnight. So let's scroll back to about 9:30, what we had going into the open today. And we can see we had a bull channel. This is the close of Friday last week. And today, you can connect the higher lows. You can draw a parallel. So the market is creating higher highs and higher lows. We know this is a bull channel. We also know that bull channels evolve into trading ranges. 75% of the time you get the bear breakout of a bull channel. So my expectations here are really one of two things are more likely. We're either going to continue in this channel and stay contained between the trend line and the trend channel line, where we find resistance above, support below, and just continue, or we'll get the bear breakout and eventually form a trading range. I don't know that we'll get all the way down here, but it is possible because channels eventually evolve into trading ranges, which means if the channel began here or maybe even down here, this entire rally could end up being legs in a trading range. And you can see fairly strong here, open gaps, but then we started getting deeper pullbacks and gaps closing for the bears. So limit order bears selling highs, certainly making money. So you can tell the bull trend is weakening. So in other words, my expectation, what I do not expect for today is a strong bull trend day. I do not expect a strong breakout of the channel line, and that aligns with my expectation on the daily chart. So here's the 5-minute, and I'm going to draw what I had drawn this morning. Different computers will draw this different ways. Some might draw the channel line like this, others like this. It doesn't really matter either way, but I like overshoots, and this is a bit of an undershoot. Again, it actually doesn't matter either way. The logic is the same, but I'm going to draw it this way just for the video to explain my thoughts. And then you can also draw a trend line also, just maybe a best fit. Doesn't have to be perfect, but there's a trend line down here, a channel line up here, and the gap up is breaking above channel line. And what did I say? And this is an Al Brooks study. He talks about it in the course in the books. 75% of the time you get the bear breakout of a bull channel. So if you get the bull breakout, most of the time the market reverses within 5 bars and then goes and tests the trend line. So the gap up is breaking out above the channel line. So the expectation is a reversal within 5 bars and a test of the trend line. So right off the bat, bars 1, 2, 3, is it a bear trend from the open? It might be. Bar 3 is weak. It's a trading range bar. It's also too early to tell, but the odds are it's going to be either a more bearish day or a trading range day. But a bull trend day typically doesn't begin with 3 consecutive bear bars. And then moving forward, just going to try to keep this one brief. We can see what happened. I might redraw these lines, but I want to talk about in here. Gap up, you can imagine the gap as what we saw on the Globex chart, or you can simply think of it as a big bull trend bar. So big trend bar, big up, big down, big confusion. Bulls expected to get a second leg, so buyers below, second leg up likely, but the bears also expected to get a second leg, so sellers above, second leg down likely. So here, 3 consecutive bear bars, first reversal, probably minor, bears probably will get a second leg. And we start to go sideways. We have a high 1 here. You can call this a high 2, high 1, pullback, high 2, or high 1 in here, and then a high 2 here, bar 12, triggering the high 2. So to me, bar 12 was a high 2. So gap up, 1 reversal attempt, second reversal attempt, second attempt at trend resumption for the bulls. We have a high 2, and we got to rally out of it. But remember, big up, big down, probably a trading range, and it's a triangle. So range compression, lower highs, higher lows, it's breakout mode. The bulls got a breakout attempt. And you can say, depending on how you draw the triangle, if you have it drawn this way, 14 is a breakout attempt, failed. 16, breakout or breaking out above the bear trend line and follow through, but then 18, reversal. And then to me, bar 18 could be seen as a lower high major trend reversal, where the gap up could be seen as a bull trend. The sell-off down to 3 or 4 broke the bull trend line, and then we had a 2-legged retest of the trend's extreme, retesting the, in this case, the open of the day, or the high of bar 1, this general area where traders got trapped on the open on the bear breakout. So 18, lower high major trend reversal. I think bar 18 is an always-in flipping bar, where if you're long for any reason, you just have a default exit below bar 18, and there's a stop order short if you're a bear below 18. If you take the stop order sell, where do you have to get out of the trade? Do you have to exit above bar 22? Probably not. We have a 4 or 5 bar micro channel down to 22. Yes, it's a test of the moving average, but the approach is fairly strong. It's a spike, so we don't have a technical pullback in this leg. You can say it's a channel several legs down on a smaller time frame. That's true, but it's minor. It's a tight channel, so the first reversal probably will be minor. Is bar 22 really going to reverse 18 through 21? Probably not. So I think it's okay to stay short above 22. What about 25? Better reversal bar, but still a tight channel, and 23, 24 probably needs a second leg. At this point, we're getting consecutive sell climaxes. Sell climax, pause, sell climax, pause, sell climax, pause. Now down here, another sell climax, bar 28. Still a tight channel, 28 still likely to get a second leg. But at this point we have 1 stop order attempt, 2, 3, bar 33 was the 4th one. And if you count the stop order reversal attempts, you think about the 80% rule. 80% of trend reversal attempts fail. So you expect the first reversal to fail, the second, maybe you count this, depends on, I think it's subjective if you count this. So 1, 2, maybe 3 or 3, and this is 4 or 5. You expect the 5th one to at least convert the market into a trading range, maybe not necessarily a major reversal. But if you do the math, the 80% rule, eventually after 4 or 5 attempts, you might start to get more two-sided trading. We're also testing support. There were magnets below. The blue line is the prior day's high, and the red line is the prior day's close. If you trade the SPY, then the prior day ends at bar 78. You can see it's close to testing that price as well. So it doesn't really matter which chart you trade. It's basically the same. So we're trying to break below yesterday's high, 28 breaks below, but reverses up, bad follow through, trying to break below again, but weak breakout 33, also testing support, Friday's close, and unable to get bars closing below that price. And here we start to go sideways for 3, 4, 5 bars, entering a tight trading range. The bulls, they hope it's a final flag and we eventually get a major reversal up. The bears see it as a bear flag, a minor reversal. The bear trend is just getting weaker, but it's going to continue to channel down. We can actually look at the prior day's high as a support level. This was an important price. The market tested it repeatedly, tried to break below, failed, tried to break above, failed, back and forth. We finally got a breakout and follow through of yesterday's high, and then we see bar 48. The bulls hoping bar 48 is a breakout pullback. That's the way they see it. The bears see it as a failed breakout and a reversal attempt back down. And in this case, the bulls won. We had a high 1 and a high 2 bull flag, bar 52. So 53, breaking of a high 2. Fairly strong bar, tail above, but trapped traders, any trader who sold above 51 or anywhere here, because there's a micro gap, 52 high, 54 low, the space between those bars is a micro gap, and that indicates trapped traders. If you sold here, scaled in higher, the market never came back to your break-even price, the original entry, even if you sold the 51 high, which is a more reasonable trade than selling above 52. The market never retested there. Because of that, there's fuel in the market. It acts as energy. Those trapped traders eventually have to give up. So micro channel to bar 56. Is 56 a good stop order sell? Of course not. We have a tight channel up, maybe a 5 bar bull micro channel. The odds are the first reversal will be minor, buyers below. So traders buy. It's a shallow pullback because of the trapped traders. There's a demand for bulls and bears to buy. Bears who sold down here, even if they sold 48, if you sold the high of 48, 53 trapped you. 54, if you were quick, gave you a brief opportunity to exit your short at break even. But the bears who sold are trapped into a losing trade, and they're looking to buy back shorts with a smaller loss or at break even. The bulls who did not buy missed the rally, and they're looking to buy a pullback, capture that second leg. And here, the bull channel is continuing, but we're still within a trading range. You can call it a bull trend, but if you think about what Al talks about with terminology, Al would call these swings. We have a swing down and a swing up. The move is much bigger than the minimum scalp size. But a trend is when the chart you have bars starting in the bottom left of the chart and trending all the way to the top right of the chart for a bull trend, vice versa for a bear trend. But this looks like a trading range. It's a broad range, but we have a swing down and a swing up. So a swing is a more minor trend. And then if we go in order from there, after a swing, we have legs. Here's a leg down, a couple of legs up, legs in here. When the market's rallying, a pullback is even more minor than a leg. So it goes trend, swing, leg, and pullback. But they're all just different names for price movement, price legs. So I'm going to wrap up this video here. I want to remind everybody, if they have not studied the Brooks trading course, please visit the Brooks trading course. There's a link to the course and the website in the description of my videos. And I think it's just, my videos are good for a supplement to study, but what I really recommend everybody to do is challenge yourself and make your own videos. And you don't have to post them publicly, but even just to record yourself for 5 or 10 minutes talking about the chart can be really beneficial. So I'll leave it at that. Thanks everybody for watching. As always, I appreciate it, and I hope everyone has a good night.